Okay, so in today's video we're gonna talk about supply and demand, right? Normally demand zones happen when there's irregularities on the range, right? So let's say we have a range right here, right? And then we found the irregularities when people are disagreeing that the price is at this range, for examples, right? We see that people agrees that the price of a SPY will be on this box right here, and then they start leaving the range. When they leave the range, we found a demand zone as a gap up over here. So the demand zone would be normally is right somewhere right here following the back, normally before it goes up it's normally somewhere on the top of the range, right? On the top of the range all the way to the bottom of the range. That's where your demand zone is. So you wait until it comes back to the demand zone, and look what happened. It creates a double bottom. So the demand zone is very valid, right? Very valid, and it comes back up, right? And then now we have another demand zone right here. We have a range and we have the breakout, right? This is the range right here. So if this is the case, like I would put the demand zone, it's somewhere right here. Yeah, this is the demand zone. And then this one, the demand zone would be right here, right on this range, the mini range, right? It goes back down, up, then goes back down again. Right, this is the demand zone, but it's kind of invalid since it broke the zones. Okay, like we're talking about here, this is the supply zone right here. Alright, this is a supply, start ranging, and then it broke the range in this one, right? In this video I'm just gonna show you properly how to draw supply and demand properly. On this one I'll put it somewhere right here as a demand zone. This is the range, it broke up, retesting the demand zone, and now it goes up heavily, right? On this one we have a demand zone as well, right? Put 1 minute time frame. I probably gonna lost it. Okay, the demand zone should be somewhere from this green all the way down here. Look what happened. Bounce, another bounce, another bounce right here, and then it goes back up. Supply zone. We have a supply zone right here, right? Supply zone, retesting the zone, it almost broke out of the zone. This will happen most of the time, but it's not nearly as often as you think though. Normally it will just retest like an overbought situation, and then they push it back down in the beginning of the open market. Now in a bigger time frame we see that this is the range right here. So this is a 1 minute time frame, but in a 5 minute time frame or 15 minute time frame we know that this is the range right here, right? And then now it broke down out of this range. Yeah. So in this case, the supply zone will be somewhere around here and on top of here, right? And then in a smaller time frame, we have a supply zone over here. So there's double supply zone, right? This is the bigger range. This is a smaller range of supply zone, right? At some point, we might see it coming back here again. So I don't know when, but since this is a big bearish engulfing from yesterday's movement because of the Fed bad news, I would expect that there will be another gap down here somewhere on the key level, or maybe at this demand zone, right? This is a big demand zone because it broke out of it. Broke out of the demand zone, retested, and then back up again. We might see some bounce over here right at this level. So in this case, if we see a gap down all the way here, we must see some bounce or some movement to the upside again, right? But how big is the movement to the upside? I don't know. So in this case, we're gonna discuss about key levels so we can determine if this bounce on the demand zone right here, where are the key levels that we need to see, right? So in that way, we know how big is the movement to the upside, or maybe when is it gonna end, right? So for key levels, we just need to find easy support and resistance, right? Easy, it's very easy. So we just want to find the point that it used to touch. For examples, we have a bounce right here, that means we have a support, and then we have another bounce right here, that means the support is very legit, right? So we're gonna draw a line right here. When draw a line, it has bounce over here, it has bounce over here, and then it gets rejected right over here. So just letting you know, the key levels, just treat it as a zone. All right, so let's say like, oh, okay, this is gonna bounce to the key level, but then something happened, it doesn't even reach to your key level, and then you start going drop down again. So just keep that in mind, that key level, treat it as a zone. So say like if you're longing from here all the way up to the key level, trim it before it reaches the key level. All right, so in this case, the key level on the intraday perspective, I would just use 4 hours and make it different from the rest of the lines that you're gonna make in the 1 hour time frame and 15 minutes time frames. I don't think we necessarily need the 5 minutes time frame key levels. I would just put the 4 hour, 1 hour, and 15 minutes. That is just my preference. So that way you don't have too many noise, too many lines going on in your chart, right? So for 4 hour time frame, I'm gonna mark it, I'm gonna make it different from the rest, right? I'm gonna make it this one right here. I'm just gonna put an estimate, it's not a big deal. This is the key level, we have another key level right here, and then we have a bounce. I mean, we got rejected right over here, so I'm gonna just put a key level right here, right? We have a rejection, a breakthrough, and then this resistance become a support. It broke the resistance right here, it broke the resistance, and then it came back down, bouncing at the previous resistance, becoming a support, now it goes back, it went back up. And then now we have something right here, right? We have it over here. Just look for the one that is obvious in the 4-hour time frame. This one is very obvious as well. And then where else? Okay, since we are rejecting from this level, right? Rejecting at this level, so we don't really necessarily need to put like more on the top right here or the top right here. We don't need to put everything because there's gonna be endless, right? We just need the one that is the intraday perspective. So let's say we're at this level. Just assume that we're gonna be up somewhere right here or maybe down at this range. So I'm gonna just put it somewhere in between this and this, right? If it breaks down, then we're gonna look somewhere in the back right here as a key level. But at this point, we just focus on this range right here, right? So, and then you're gonna have to do this to every single ticker like Tesla or maybe Amazon, whatever your favorite stock is. Then after you do your homework, I hope you guys can find a significant change, a significant profit that you probably make on your intraday trading. So in this case, so key levels and supply and demand are very similar, but remember, on the supply and demand is happens. It needs a range and a break of a range. It's not a trend. Remember, it's not a trend. It's a range, right? Go sideways. Like for example, this is the range, right? This is the range. It broke the range. Now it becomes a demand zone right here, right? This is the demand zone in a bigger time frame. But normally we don't really need to focus on that. Just focus on the 1 hour demand zone that you can see, right? In this case, you need a smaller time frame in order to find an accurate and appropriate supply or demand zone, right? Let's just say oh yeah, I'm gonna put the level first. So in the 1 hour time frame, we see a lot of bounce over here. We see a lot of bounce. So I'm gonna put it right here. Remember, make it different. This is the 1 hour time frame. We're gonna make it a little different than everything else. Right? We just find the one that is obvious. Right? I would say this is pretty obvious, so I'm just gonna mark it. This one is very obvious as well. We have a rejection and then we have a bounce, so there should be a support and resistance over here, and then this one got rejected as well. And we have these 2 wicks over here. We put that in as well because there's a rejection and then there's another rejection, right? So we have there's an obvious resistance over here. It might be become a support over here, and then it comes up to somewhere, you know, on the key levels, right? On Monday, well, who knows, right? But we're just gonna mark it right there, and then as if it ever bounce over here and then we long, we know where to take profits, right? We have a big key level over here, take profit. If it breaks, and then we take the second profit over here. If it breaks, we get take second profit over here, right? So that easy. Don't make it hard. Okay. I guess we're done on the 1 hour time frame. We're gonna go deep in the 15 minutes time frame. All right. What do we see? Remember, we're just focusing on the nearest one. Maybe over here. See it over here. Here we have a bounce. We have a bounce, right? And then here, we see it right here. We have a multiple rejection. There's a big resistance, and then we get another rejection right here. I'm gonna put it here, and yeah, that's about it. Maybe maybe this one over here, we have something comes up and down retesting, and then this one too, it got rejected multiple times, right? So I'm gonna put it right here, right? Okay, so after we're done with all of this, oh, maybe this one too, yeah, this one too got rejected several times, and then we got a bounce over here. There's a support, and then there's a resistance over here, right? It's been touching. Make sure the lines are touching some of the wicks, or some of rejections, or maybe like some of several rejections to the downside or to the upside. Right, just make sure you get that all covered. Right, so in this case, I have a swing put on Nvidia and Tesla from the other day. I kind of knew what's gonna happen. This is a big bearish engulfing, so it's a good time to swing. If you see like a big bearish engulfing, it's a good time to swing. Alright. Okay, so in this case, this is for the homework for tomorrow. You're gonna see we know that there's a supply zones, and then in the 1 minute time frame, we know there's a key level right here. This rejection to the upside is not something you can ignore, right? It happens for a reason. There's a lot of buyer buying at this support, right? Just keep that in mind. This is not nothing. There's something right here, and then this one too. There's something on the top over here, right? There's a big seller leaving the range as well to the downside. So we see that there's a massive resistance right here. There's a lot of sellers that really don't like this resistance on top, right? Right? It could be somewhere right here, yeah? Because it got rejected. Make sure the lines is connected. There should be one up here too, right? But I'm not gonna even bother because we have a lot of supply zones, right? We have a lot of supply zones right here, right? Supply zones, supply zones, supply zones, right? We have 2 supply zones inside of a supply zones, right? Okay, based on the previous trade, how do I make so much profit on the supply zones, right? It's not that hard. Let me show you, right? For example, right, based on the trading, it's not hard. Here we see a range, right? It's on August 9th, right? We see massive choppy movement, but what happened? Up, we break through. Now this range become a supply zone, right? From here all the way down here. This is what's gonna help you on trading, right? No, right? So after how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 9. And the 9th day, we come back to the supply zone. So if you guys are thinking of shorting this, be very careful, right? It's been very choppy the last few days, and at the end, look what happened. It bounced, right? It bounced, it got rejected. Just keep that in mind. This is becomes a demand zone as well, right? This sorry, I said this is supply zone before. Sorry, this is the demand zone. And then this one, this range right here, become a demand zone as well, right? This range right here, this is the demand zone, right? This is the demand zone. Just find the latest wicks, right? Leaving from this range, it got a gap up, and then it comes back down. In the pre-market, it comes back down, right? For those of you who thinks of selling, you're gonna get screwed, right? It's a very obvious demand zone right here. So in this case, we have a key levels as well. The key levels is right here, right? We get multiple rejection, the key levels, right? And then we have key levels right here as well, right? We have rejections over here. Look, supply zones and demand zones, supply and demand zones, and key levels. Look how it helped you so much to find the bottom. Huh? If you look at 1 minute time frames on this one, it might have a lot of noise. Sometimes if you're very good at it, like you don't need to draw the demand zone. Like sometimes you just need to draw the key level, and you know this is the demand zone. You don't need to draw it, but most of the time I just draw the obvious one. Okay, look what happened, right? As we bounce at the key level, it comes up. Look how much profit you can make in one day. It's like a $3 move, right? And then it comes back down to the demand zone, and you can even long again. Long, and then you long again, you play call again, you play another call, and then look, when you see a bounce, you should see a reversal pattern, right? We have a trend over here. We see it coming up side the trend, retesting the trend, and look how easy that makes your trading very effortless, right? This is how people make a lot of money. And then we have a range, a bull flag as a range, and then we have a demand zone again, right? A demand zone, but then it got broken through, right? It got broken through, but look, it bounced again at the demand zone, the previous demand zone, right? It bounced again, it comes back up. Look how much is the bounce. It's from 415 to 419. Look how much money you can make just from the bounce. Like supply zone and the demand zone helps you find the bottom or the top, or it helps you as well to know where there's gonna be a buyer and where there's gonna be a seller, so you don't get caught in the wrong direction, right? See? And then this is how I trade normally based on the supply and demand zones, and then the key level just to use it as a profit target, right? See, from the 4-hour time frame that we did as a homework previously, look, so we take this breakout right here, we're gonna call, we're gonna buy a call, and then take profit as soon as it reaches your target, right? And then it broke the key levels again, right? It broke the key level. Look, we have another one like right here. I think we can find it as well, somewhere right here too. See, we have a key levels over here, right? That we can know, or maybe you just use the average to range, or in abbreviation is called ATR. So we know usually SPY ATR, they move about $3 to the upside or $3 to the downside, and then they start reversing again, right? And then this one is very simple, right? It has 415 to 418 or 419, $3 usually an ideal place for you. A $3 move is an ideal for you to take profits. It's not that hard, right? And then remember, like this is a bull flag, right? We use the bull flag. This is a reversal, simple reversal falling wedge signals that you can use to make a call to the upside, right? And this is a very choppy range. You can consider this as a supply zone as well, right? See, a supply zone, we have a seller over here, it broke the range, comes down, retest back up to the supply zone. Look, but what happened? They broke the supply zones, right? So these supply zones become invalid after it broke everything, right? It broke everything. Now you can see it. Normally, you know the supply zone is broken once you see a bull flag, like a mini bull flag, a very obvious one, right? Just keep that in mind. else did I make profit on the supply and demand? Like, let's see how it's gonna help on your trades. Right, we have a supply over here as well. I mean, demand. We have a demand. Right, it comes back down to the demand zone. It get bounced. Right, get bounced. And then, we put this as a key level. We put this as a key level as well. And this range right here. See, from the 4-hour time frame perspective, if you're longing on this bull flag, you know where the top is. You know where the top is. Alright? And then this one too. If you're longing this, the first profit you're gonna take is over here. Simple. Right? Simple. And then $3 move. Always assume there's gonna be a $3 move to the upside. And then it's gonna start reversing down. Alright? $3 or $4 move. Normally it's 3. I've seen it happen on SPY. I think on QQQ too. Somewhere about $3 to $4. But Tesla is like $15. Alright? $15, $10 move to the upside. Alright? And then we have a demand zone right here. It got broken down pretty easily. So this is gonna be a very weak demand zone. Right? But look what happened. It comes back down to the demand zone. Right? And then what happened when it comes back down to the demand zone? Start coming back up. See, this is what happened. It doesn't have to come back exactly at the demand zone. Right? Doesn't have to come back exactly. It's just gonna bounce up right before it reaches the demand zone. That means that people are anticipating that this is the bottom, which is kind of gambling. But look at the risk to reward after a big dip, and then you start assuming this is the bounce. So you buy it at a very low level, and then you use this as your stop loss as well, below this line right here, right? You use it as stop loss, and then you'll see a big bounce. You make a good chunk of money from this call, right? Even though, like, if you buy it over here and then you trim it over here, that could be like a 15%, 20% profit right there, right? Look how easy it is. Make it effortless on your trading. Just use supply and demand, right? And then now we know there's a big dip like this, right? How do we know the bottom? The bottom, you can use a key level or a demand zone, or maybe a demand zone. So in this case, we know there's a range over here. There is a demand zone right here. So this is for your homework for next week. We have a key level and a demand zone. I'm assuming there's gonna be a bounce over here. Okay, a bounce over here, and then we're gonna take profit somewhere on this key for our key level, and then see what's gonna happen. It's gonna go back down or gonna come back up, right? I don't know. So yeah, so in order to know that there's gonna be a bounce on the demand zone, I normally use this thing, classic reversal pattern, right? Once you find this thing somewhere on the demand zone or supply zones, if you're in demand zone, you're looking for a bounce at the downtrend. There should be a pattern, right? Something like this. Most of the time it's falling wedge, double bottom, head and shoulder, right? On the top, you normally see this head and shoulder, double top, or maybe like a falling wedge pattern, right? So don't make this hard. You see this, some of the pattern over here, yeah, at the demand zone. Don't be scared to long it. Just go buy a call, and see where you take the profits at, right? So in this case, trading is very simple. You just need to take a risk, and then if they go against you, the stop loss is 10 to 15%. But if you on the right direction, you'll make more than 20%. 20, 30, 40%, 50%, 100%, or maybe 100 or 130% in one day. Dude, you make a lot of money, right? Intraday trading is very simple, right? We know there's a demand zone, I mean a supply zone as well. This whole thing is a supply zone, right? It comes back up, touching the supply zone, rejected. So we know there's a supply zone over here as well. Why do I know? Because there's a gap. They left the range, right? They left the range. Look what happened. It comes up, leaving the range, got rejected on the demand zone. Got rejected on the demand zone. Look how much profit you can make just from this. Imagine, look how much profit you can make just from the supply and demand zones. That's a lot of money, guys. It's a lot of money. This is why traders become very successful. They know the supply and demand. They know where the seller's at. They know where the buyer's at. Right? If you know both, you make a lot of money. Right? Normally, like if this wants to go up, you have some type of reversal pattern, and then it breaks the trend, and then it creates a bull flag, and then reach the top. Normally it's something like that, just like this one right here, right? If we focus on this one, we have a demand zone right here, right? Demand zone, we have a classic reversal pattern. We have a trend. I think the trend is over here, maybe. Yeah, the trend, and then we have a bull flag right here, telling you, hey, we're gonna jump up, right? We're gonna jump up, and then it's right. It gap up, comes back down, retesting the trend line, and it goes back up again, and then it creates another falling wedge. It broke up again. You will see this happening somewhere right here too. Right? That's how you know that it's gonna bounce back up. Like this, for example, you can see it too in the 1 minute time frame. What date is it? 11. Alright, it leaves the range, comes back to the demand zone. Look what happened. If you swing this one and then leave it for the next day, you make a lot of money just from based on supply and demand, right? And then the next day, like, oh, where am I gonna trim this, right? You know there's a key level you can use as a taking profits or taking profits level right here, right? This makes your life so much easier. Just know the supply and demand, and then if it bounce, you know there's a classical reversal pattern, right? Or maybe like a mini range, and then there's a bull flag leaving the range. Yeah, should be very easy, right? Okay, try to study how to find supply and demand, and then don't forget to use the trend line, and then use the key levels on this if you see a range, put the key levels properly, right? Just only use the 4 hour, 1 hour and 15 minutes time frame. That will help you tremendously. And then you'll find it something like this. It's a lot of noise, yeah, a lot of noise. Okay, but we know there's a demand zone over here, but I'm kind of expecting it to be, there's gonna be a big momentum, downward momentum, something like this. We have a gap, another downside, and then we have another gap on the next day. I'm expecting something like this to happen as we see a big bearish engulfing on the daily. right? That's why I put a lot of swing position over here, right? As soon as the market closed, I think the market closed down here, I put uh, a lot of short. Even the Bitcoin, the market, SPY, QQQ, also like some tickers like Nvidia. I pick Nvidia because it's very obvious, right? So when I saw this on the when I was doing my homework in the morning, I saw there's a big trend, right? This one right here, it's been hovering on the trend line. This is a big bear flag, right? A bear flag. It broke down the bear flag. It comes back out. I thought it's gonna be it's gonna come back up. It doesn't. It's gonna be a range over here, but instead we have a bad news. Just on Friday about PCE. The Fed is giving us a warning and then creates this big downfall, right? Then now I think like at the open, I kind of showed it somewhere on the middle, either here or here. I forgot. Expecting for it to probe further down out of this some to go back to the demand zone somewhere right here, right? This is a demand zone. No, I forgot to tell you. Okay, the bigger the jump, the stronger the demand zone is. The same thing. If you see like a big downward momentum, like a gap, like this one, a gap right here, the stronger the supply zones. Right? This is a very strong supply zones, but somehow we have enough volume to kind of like break it through, but we didn't really break it. Right? We got held on the supply zones. We got held on the supply zones. There's not enough buyer to break it out, so we come back down. And this is something like a double top as well. This previous high, and then the next wick is a higher low. So we assume that okay, this is very weak. There's not enough buyer to break it up, and we're on the supply zone as well, right? And then next supply zones that we're gonna see is somewhere right here, and then we'll see some consolidation or bounce at the 154 152 area, this one right here, right? So on Bitcoin, Bitcoin is the same thing, yeah. I'm gonna use Coinbase on this one. Alright, same thing. What do we see here? Supply zones. What do we see here? We have multiple supply zones, right? Supply zones over here. We have another supply zones over here. That they just become a supply zones, right? And then what else? This is a very strong downward momentum, downward movement. So I'm gonna assume that there's a supply zones right here, right? But on Bitcoin, I normally look at the 4 hour and 1 day. So in this case, I'm gonna just look at the 1 day, see how many, what is the big deal, the big supply demand zone. This is a very big demand zone, right? It's ranging, and it broke out very strongly. Right? Look what happened. It bounced, right? And what else? What else do we see? Just from the 1 day perspective, like just consider which one is gonna be a supply zones, right? I mean a demand zone. I would say this one right here, this whole thing. At the 11,000 mark, right? If this ever comes here, this is my buying area, by the way. So if it ever comes down here, like I'm gonna buy heavily. Maybe yeah, somewhere right here. We have a strong upside movement, and then this one too. There's a demand zone right here, right? So we can just assume this is the 8,000 range, right? 8,000 range. So I'm just gonna if I want to invest, like, this is my price, range right here, 8,000 to 12,000. If the ever goes back here, I'm gonna buy heavily. So let's say in the weekly time frame, right, we know that this is a big, this is the range, right? This is the range. I'm just gonna assume that it's gonna come back down to this zone, right? This is the demand zone in the weekly time frame. So do you think it's possible to go to the 4,000? I don't know, maybe. So 13 and 4,000 area is actually my buying. So when I see Bitcoin is at this level, I'm gonna start dollar cost averaging. So I'm gonna buy it maybe like every month or so. I'm gonna buy it slowly, and then once it has a bull run again, and then the Fed start printing money again, we should see a strong upside movement because there's so many money in the system. All right. So okay, I'm gonna wrap this up. This is just supply and demand and key levels guide to help you on the intraday trading, or maybe on the a long-term investment kind of trading, a swing trading as well. That's up to you, but the guide is very simple. This is it. This is the ultimate guide for you: supply and demand and the key levels. All right. So I'm gonna look for taking profits. I'm gonna start trimming my Bitcoin short around the 13,000 marks, or maybe the 12,000 mark. Yeah, somewhere right here, 13,000, 12,000. Yeah, 12,000. I'm gonna start trimming. If this ever goes down, I'm gonna look for a reversal, and then I will close all of my short position. All right. This is all for the guides today about supply and demand and key levels. Alright, I'll see you on the next video.